Money has a strange way of revealing who we really are. Some people crumble at the first loss, others get reckless after a few wins. Most never realize that the hardest battle in investing isn't fought in the markets, it's fought in your own head. Every trade, every investment, every buy or sell is a mirror. It reflects your fears, your confidence, your greed, your need to be right. And if you don't learn to see that reflection clearly, you'll spend years chasing profits while running in emotional circles. Let's start with a simple truth. You don't lose money because of the market. You lose money because of your reactions to the market. When prices fall, you panic sell. When prices rise, you rush in late because you can't stand watching others win. And somewhere between fear and excitement, your plan disappears. That's why mindset mastery isn't a motivational quote. It's a survival skill. The smartest investors in the world aren't the ones who predict the future. They're the ones who control themselves when the future surprises everyone else. Think about it like this. If trading and investing were a sport, the field would be your emotions. 80% of the game happens above the shoulder. Your mindset decides whether you play to win or play not to lose. And yet, most new investors start by asking, which stock should I buy, or what's the best strategy? Few ever ask, who do I need to become to handle losing 20% without losing my mind? Because the truth is, even the best technical analysis or economic model won't save you if you're emotionally attached to every trade. You can follow all the indicators, read all the books, and memorize every ratio. But if you can't separate your identity from your investments, you'll treat every loss like an insult and every gain like validation. That's not investing, that's emotional gambling. Let's explore some of the hidden biases that quietly shape your financial decisions. First, the endowment effect. The idea that once you own something, you overvalue it simply because it's yours. You've probably seen this at work when someone refuses to sell a stock that's tanking because it'll bounce back, or when you cling to a car that costs more to repair than replace because it's your car. In markets, that same instinct can be lethal. When you own a stock, you start to defend it like a friend. You justify every red candle. Your brain whispers, it's still good, just misunderstood. And before you know it, you're managing your emotions instead of your portfolio. Imagine you bought a company at $100 a share. Now it's at $75. Selling it feels like admitting defeat. But here's the real cost. While your pride holds on to the loser, your capital can't move to the winner. The best investors aren't loyal to their stocks. They're loyal to their strategy. Another common trap, overconfidence. You make a few good trades, start feeling untouchable, and suddenly you're buying before confirmation because you've got a feel for it. That's when the market humbles you. Confidence is useful. Overconfidence is fatal. It blinds you to risk, makes you see patterns where none exist, and tempts you to break your own rules. On the flip side, underconfidence can be just as damaging. After a few bad trades, you start doubting every signal. You wait too long, miss opportunities, and convince yourself that sitting out is safer. It's like trying to drive forward while staring only in the rearview mirror. The key is not to eliminate confidence, but to anchor it in evidence. Your data, your journaling, your consistent habits, not your feelings. That's why some seasoned traders scale down when they're losing. Not to hide, but to stay in motion. They trade smaller positions to rebuild rhythm, much like an athlete who trains with lighter weights after an injury. Momentum matters, even if it's small. Then there's the emotional twin pair, positivity bias and negativity bias. We tend to repeat what once worked and avoid what once hurt. You made money on a certain stock before, you trust it now. You lost money on another, you avoid it forever. But markets don't remember your feelings. They move forward indifferent to your past wins or losses. One of the hardest lessons in investing is that yesterday's pattern doesn't owe you tomorrow's profit. The same company that rewarded you once might punish you next time. And the same strategy that failed last year might suddenly thrive in a new market cycle. The secret isn't to erase bias, it's to become aware of it before it controls you. The next part will dive into loss aversion, FOMO, and the practical systems that help investors stay objective, like journaling, structured reviews, and scaling rules. Losses feel heavier than wins. That's not weakness, it's wiring. Your brain evolved to remember pain longer than pleasure because survival once depended on it. But in modern markets, that instinct is poison. You lose $1,000 and it hurts 10 times more than the joy of earning 1,000. So you tighten up, you hesitate, you start protecting money instead of growing it. This is loss aversion, the invisible hand that keeps millions of investors trapped in mediocrity. The best traders understand that losing isn't failure, it's tuition. They pay small losses to stay in the game long enough to catch the big wins. Because what really kills a portfolio isn't one bad trade, it's the refusal to take one. Now let's talk about the monster that stalks every bull market. FOMO, the fear of missing out. You see others posting gains, you hear your friends bragging, and suddenly the urge to join the party drowns out logic. You buy late, high, and hopeful right before gravity returns. FOMO doesn't whisper, it yells. It convinces you that being early is risky and being late is safe. But by the time the crowd feels safe, the reward is gone. Every trend ends the moment it becomes comfortable. So how you fight it? You pause. You ask, what's driving this decision, strategy, or emotion? If the answer is emotion, you wait. Missing one rally won't ruin you, but chasing one might. Objectivity is your shield, and the best way to stay objective is plan before you feel. Write your entry, exit, and position size before you even open the trade. When emotions rise, you simply follow what you already decided in calm waters. That's why journaling isn't just for writers, it's a weapon. Each trade you record becomes a mirror. It shows your patterns, your triggers, your progress. When you look back, you start noticing the moments when logic left and feelings took over. Over time, this habit builds distance between you and your reactions. You start to respond instead of react. And that small gap, the pause between thought and action, is where real mastery lives. But here's the catch. Objectivity doesn't mean apathy. It's not about being emotionless. It's about being emotionally aware. You can feel fear or greed without letting them drive. Like waves under a ship, you notice them, but you steer straight. Another key habit of disciplined investors is setting review rituals. Not constant checking, not daily panic, but structured observation. Once a day or once a week, you review your open positions calmly. You analyze, not obsess. You don't wake up and check your phone in panic. You check your plan on schedule. Obsessing makes you see danger everywhere. Neglect makes you blind. Consistency keeps you sane. Think of your trades like plants. They don't grow faster because you stare at them. They grow when you water them on time and let them breathe. Record keeping matters too. Profit and loss tell only part of the story. Behind every number is a behavior: when you entered, why you stayed, when you froze. That's where your real growth happens. Keep track not just of your wins and losses, but of how they happened. Did you follow your signal or your gut? Did you respect your stop loss or move it in denial? Patterns reveal truth, and truth is your best coach. Once you've gathered that data, you can start scaling intelligently. When your results are consistent and your equity curve is climbing, you scale up. When it's declining, you scale down, not out of fear, but precision. You let math, not mood, decide your size. Consistency beats intensity every time. You don't need to trade harder. You need to trade clearer. Perspective ties all of this together. Most people say their goal is to make a profit. That's not a goal, it's a result. The real goal is consistency. Because consistent execution creates confidence, and confidence creates profit. It's like learning to swim. You don't jump into deep water first. You start small, swallow some water, adjust, and keep moving until it feels natural. Trading works the same way. You start with discipline, build skill, then scale. When you review your trades, don't just ask, did I win? Ask, did I follow my plan? A profitable trade with bad process is a hidden loss. A losing trade with good process is progress. Your goal isn't perfection, it's refinement. And sometimes the best move is no move. If you're burnt out or revenge trading to recover losses, step away. Take a break before your emotions take control. Markets will wait, your sanity won't. But don't stay away too long. Momentum is fragile. Rest, reset, and return with small positions to rebuild rhythm. That's how professionals reset after chaos. Trading and investing are deeply personal journeys. They expose your patience, your discipline, your ego, and your fears, but they can also teach you mastery, humility, and freedom if you're willing to watch yourself as closely as you watch the market. Because in the end, you're not trading stocks, you're trading your beliefs about them. And the person who learns to master that inner market, the one between impulse and intention, wins far more than money. Your mindset is the foundation of every dollar you'll ever earn, keep, or lose. Markets will always shift, prices will always surprise you, but the one thing that can stay steady if you build it is you. When you learn to trade without panic, invest without ego, and decide without emotion, you stop being just another player in the market. You become the calm in the storm. That's what real wealth feels like. Not the thrill of a win, but the quiet confidence of knowing you can handle whatever comes next. If this video helped you see money and mindset in a new light, give it a like. It tells the algorithm and me that content like this matters. Subscribe to The Passive Path for more deep dives on building financial calm in a chaotic world. Drop a comment about what part of your own psychology you're working to master: fear, greed, or maybe the habit of second-guessing yourself. And if you know someone who's struggling with their investing emotions, share this video with them. It might be exactly what they need to hear today. Good luck out there. Stay patient, stay grounded, and keep walking your passive path. Feel free to explore more videos on the channel while you're here. I'll see you in the next one.